Hello traders, welcome back to my channel. In this video, we're going to be looking at Asian Session Liquidity. So how to use it to avoid liquidation and how you can be able to use it to enter your trades during the London sessions. So this would actually improve your trading and as well increase your win rate. So stick around to the end of this video. Yeah, welcome guys. This is UCFX. Welcome to my channel. This channel is all about helping forex traders get acquainted with the necessary information and knowledge on how to become profitable in the forex market. So if this is you interested in contents like this, subscribe to this channel and turn on your bell notification icon to be notified whenever we upload new videos. And make sure to drop in the comment section any topics at all that you would like us to make videos on, and we'll do that as soon as possible. So without further ado, let's get into what we have for today. So just like we all know, we have our three sessions in the forex market. So the London session, the New York session, and the Asian session. So the Asian session is actually the consolidation period of the forex market. So before it's reset for the next day, yeah. So there is no volatility. So I personally don't like trading it, and then I would advise you as well not to trade it. Then why? Practically, you can easily be taken out with large spreads and eventually liquidated before the market starts to move. So for you to start trading before the London session starts, you need to mark out your Asian section highs and lows. Yeah. So because this would be used by the smart money to manipulate price. How? Look at this sketch that I'm about to show you, and let's illustrate it. Let's illustrate this concept with it before we go on the real chart for our examples. So looking at this sketch, so after price types into your supply zone or your order block, let's say price ends like this for the day, giving us this sharp pullback. So what we do next, we need to wait for the Asian section to come up. So when does this Asian session actually come up? For my time zone, my Asian session starts around 12 in the midnight. That's 12 a.m. And my time zone is actually GMT plus 1. So you could check out your own. So you need to wait for the Asian session to happen. So what happens during the Asian session? You see price consolidation. Price would move up, come down, then move up, come down, practically consolidating. And most less informed traders would uh, start placing their sell orders each time this market or this price moves down. So they start placing their orders, their sell orders, and just like the other position, the other traders will start placing their buy orders, thinking that the market will start moving up from this area. So there is basically liquidity above this range. Yeah. So there is basically liquidity above this range, and the smart money would not actually ignore this. So what they would do is exactly starting from the London Open, you start noticing stuff like this. They will first of all take out those that are on the sell side or the buy side, depending on where they actually want to move the price to. So let's say they will take out these highs first. So basically, those that are actually selling have the stop loss inside these areas, and those that are buying have their stop loss below these areas. So they will drive price through this area, taking out the stops of those that are sold in this area. Then after that, most traders would as well think that, oh, this is actually kind of a breakout, to continue moving to the upside, not knowing as well that the market is actually trying to reset for the day. So what the smart money will do again, they will actually come back, take out these lows, these Asian lows, taking out the buys, the stop loss of those that are actually buying. Then after taking that out, they will come back to mitigate or tap into this level that this liquidity purge started. So they will come back to it, tap into this level before continue to move in their intended direction. So before you come to the chart, you need to first of all mark out your Asian highs and Asian lows and wait for this kind of liquidity to be grabbed. Basically, before the market moves, there must be a grab of either side of the Asian range. So it happens more often, and you can use it to get your, you know, set your trading for the day. So we're going to be looking at the real chart to get more understanding of how this actually works. So yeah, so here we are on the real chart. So I'm going to be breaking on this setup that actually happened on the early weeks of August. So I'm going to be breaking it down using this Asian section liquidity. So let's hop on the 15 minutes time frame. So 15 minutes time frame is actually the time frame that you're going to be seeing this consolidation clearly. So let's hop on to the 15 minutes time frame. So here on the 15 minutes time frame, after a tap of price into this order block, so the price, the market actually ended for the day in this area. So basically, our Asian section starts from my own time, just like I said, it starts from 00, like actually 12 a.m. In the midnight. So my time zone is actually GMT plus one. So check out your own time zone and know where this Asian section actually falls on. So my own Asian section is actually 12 midnight, just like I said. So before you start placing your trades for the London section or for the next day, so you need to consider the Asian lows and the Asian highs, just like I said, in anticipation of price to, continue moving in your direction or your intended direction. Just like we have here, we are expecting or anticipating a bearish movement after it tapped into this order block. So here we have our our Asian started from this place from 12 midnight. So this is our Asian session. And no, before the Asian session, 2 hours before the Asian session is actually the Sydney. So we are not actually counting that. So then our Asian session ends at 8 in the morning. So here our Asian session ends. So you need to mark out your Asian highs and your Asian lows before you start taking your trades the next day. So let's do that. So here we have our Asian lows. Yeah. So you're gonna agree with me that we have our Asian lows here. Then we have our Asian highs here. So and then we have our Asian highs here. So this is our Asian highs and Asian lows. So what you're going to be doing, you need to consider these two things. So just like I said, there is actually liquidity build up above the Asian highs and the Asian lows. So here in the Asian highs, immediately price moves down, moves down, moves down. Some traders started placing their sell entries or sell orders and leaving their stop loss above these areas. And in the same vein, traders on the opposite side start placing their buy orders, putting the stop loss below this zone. So basically we have liquidity here and liquidity here. So let's identify that. So we have our liquidity above our Asian high and above our Asian lows. So what do you then wait for? you need to wait for price to actually take out this liquidity. As you can see, uh, immediately during the London session, I want you to actually see this green candle. So immediately during 8, that's the London session for my own time, you can see a purge of liquidity taking out these Asian highs. So practically, most traders would as well, most breakout traders would as well start taking buy orders, and as well traders that actually took short will start uh, being taken out, stop hunts and all those stuff. And after that, price moved down, taking out Asian lows. So on the other hand, those that actually on a buy are stop hunted. They're actually taking out from this trade because their stop loss are inside this area. So there is tons of sell stops and buy stops on opposite sides of the Asian range. So we have grabbed liquidity from the up, then we grab liquidity from down. So where you now need to focus on is the points that this liquidity purge started from. So if you go down to, let's say, to the 5 minutes time frame, you will see the other block that actually took out this liquidity. So let's go down to the 5 minutes time frame. So here we are on the 5 minutes time frame. So let's try to look at that. Yeah. So here on the 5 minutes time frame, yeah, it is nicely spotted. So we have this little green candle that actually took out this uh, liquidity. So this is where you need to start focusing on taking your entries from, because after a liquidity purge, there is still some orders that the smart money actually still have inside this area that they need to come out and close if you actually understand what other blocks are. So here, price came back, tapped into this order block before moving down. So basically, just like I said, you need to see your Asian highs and lows being taken out. So this is where you actually need to start placing your trades. So if you take trades from this area, your stop loss will basically be above this order block, this 5 minutes time frame order block, and this will basically give you about 8 pips stop loss, and you target the next lows, considering the higher time frame. Let's say the 1 hour time frame. So we need to check out the next lows to consider as our take profit. So looking at the next lows, we have our next lows to be this area. So if you had considered this area as your take profit, you would have actually gotten about a 1 to 7 risk to reward ratio, and that's actually 61 pips take profit and 8 pips stop loss. So this is basically how you would use this Asian range liquidity to get more specific entries in your trades. So I'll be making more videos on this probably in the future. So if you like this video, just remember to subscribe, to keep getting contents like this. So, and don't forget to drop in the comment section any videos that you like us to, any topics that you like us to make videos on. Just like I normally say, we are actually here to, help out in any way we can. So see you on the next video.